Hey, what's up, everybody? It's Stephen A. Williams, president and founder of thecreditrepairshop.com. In today's video, we're going to talk about 1099-C cancellation of debt. Let me get my glasses on. This gets to be a big topic, a big issue at this time of the year. And because the companies, either if you settled debt or if a debt collector or an original creditor decided not to continue their collection activities against you, they may choose to forward a 1099-C to the IRS, and you're going to be, the IRS is going to expect you to pay on that as if you had additional income. I'm going to talk about the different situations on how you can end up owing on a 1099-C. I'm going to talk about the exemptions. There's certain things that are exempt, and then I'm going to talk about how you can actually not have to claim that as additional income, but there's a specific form that the IRS requires. Remember, everything is about, with the IRS, everything is about reporting, everything is about not trying to hide from income that you had coming in. If one company is reporting something, they want you to report it. The way that it's figured out is the way that it's figured out, but you don't want to try not to add that into your taxes when you get that form, because they're going to be coming out. A whole bunch of them are going to be coming out over the next few weeks. If you don't do that, the IRS is going to consider that you're trying to not claim income that you're supposed to claim. And the way that everything is right now, with how they've changed a lot of the rules where they require the companies to fill out these forms and send them to the IRS, like they're on us hard about any settlements or settlements. That's up to the company. Believe it or not, that's up to the company. Settlements, that's up to the company. But the anything where you've paid someone more than $600, they're on us like a hawk to send that in, because that's considered additional income. I keep hearing stories on the news and stuff about if someone made $600, that they're going to start requiring all of these apps and all these places to start reporting that. Let me tell you something. Any business that's paying someone money, they've always required that. Now, what hasn't been required is that if the app is transferring money and it's over a certain amount and it looks like it's business activity, they are starting to crack down on that. And that's just going to be the way that it is. I don't like it. A lot of people don't like it. I think it hurts smaller people that are just trying to get themselves going and make extra income. There's a lot of other ways that we could, tax people. As a matter of fact, I was looking at my tax rolls for just one of my companies. Over the last month, this week is $4,700. Last week it was like $3,800, and the week before that was like $3,300 and $3,200. So like all the way through December, what I've paid just from that one business over about 12, probably even more than that, 13, 14, $15,000 in taxes. And over the year, it's a lot more, but that's for a whole nother video. So let's get right into it. And just in case I forgot, happy holidays to everybody. Get ready for that new year. We're gonna do a lot of big things here at the Credit Repair Shop, and you are included in those big things, because I'm gonna start doing Zooms. I'm already in there trying my best to answer everybody's question here on YouTube, but I'm going to figure out a way to even get to more people, to help more people. So now let's talk about, this is topic number 431, cancellation of debt. Is it taxable or not? So first, let's just talk about it. If you borrow money and are legally obligated to repay a fixed or determined amount at a future date, you have a debt. You may be personally liable for the debt or may own a property that's subject to a debt. If your debt is forgiven or discharged for less than the full amount you owe, the debt is considered canceled, and the amount that you don't have to pay. The law provides several exemptions, however, in which the amount you don't have to pay isn't canceled debt. These exceptions will be discussed later in what we're going to talk about later. Cancellation of debt may occur if the creditor can't collect or gives up on collecting the amount you're obligated to pay. If you own property subject to a debt, cancellation of debt may also occur because of foreclosure, a repossession, a voluntary transfer of property to the lender, abandonment of property, or a mortgage modification. So, in general, if you have canceled debt income because your debt is canceled, forgiven, or discharged for less than the amount you must pay, the amount of the canceled debt is taxable, and you must report the canceled debt on your tax return for the year the cancellation occurs. The canceled debt isn't taxable, however, if the law specifically allows you to exclude it from your gross income. So the whole thing is about, if you, like it's stated there, if it was forgiven, like you had a credit card debt, let's just make it easy. You had a credit card debt, you owed $10,000, you settled it for $5,000. They're going to report the other $5,000 to the IRS on a cancellation of debt form. And that the IRS is in turn going to want you to file that as additional income, like you got $5,000. If you look at it on the base of it, you really did get an extra $5,000 that you didn't have to pay, so they want that to be as income to you. So, after a debt is canceled, the creditor may send you, and they got may, which is very, up and down. They have to send that to you. Form 1099-C, cancellation debt, showing the amount of the cancellation debt and the date of cancellation, among other things. Among other things. I don't like it when the IRS says among other things. And also, it says that the creditor may send you a Form 1099-C. What I've seen happen to a lot of people is that the creditor sent it to the IRS, did not send a copy of that to the individual that they canceled the debt on, and then all of a sudden the IRS is on top of that individual saying that you did not claim all of the income that you made in a certain year. And that is not the individual's fault. That is the fault of the creditor, because for whatever reason, maybe they were upset, maybe they were like, hey, we already did them a favor by canceling out this portion of the debt. Now let them deal with it. I mean, you never know what's going on inside of a place. You never know what's going on. I can just tell you that this type of stuff has happened to plenty of my clients, where they were like, I didn't even know I had that additional income. And now what a lot of them did, I mean, people just do what they do. I'm just going to tell you flat out what clients that have came to us have done, is that they disregarded the 1099-C information on their taxes, and they were just, the IRS said, what are you going to do about this additional money? And you know what they did is they just didn't do anything about it. And it blew up, and all of a sudden, 2, 3, 4, 5 years later, instead of owing a portion on, like putting that additional, for example, $5,000 as income on that tax, now they have penalties, fees for years because they just disregarded. Don't do that. If the IRS contacts you, first you need to see where that additional income came from. I know that could be a lot of back and forth. The IRS doesn't have enough people answering the phone. Even if they answer the phone, they're backlogged with other stuff that they were doing. For my taxes, they had actually processed my 2020 tax. They paid, deposited the check, withdrew it out of my account, and they still hadn't processed the actual tax documents. Like they were like, we're still behind. They cashed the check, but they didn't process them yet. And that was because I needed to get the transcript for something. And when we called for the transcript, they were like, well, we haven't even processed your stuff yet. We're way backlogged. And that was At that time, I had submitted my 2021 taxes. So the 2021 check was cashed. It was time to do the 2022 taxes, and they didn't even have the 2021. The 2020 tax was in. They cashed a check, and then it was time to do the 2021 tax. I submitted them, and they had told me that the 2020 taxes had not even been processed yet. So they're behind. So I don't like that they say that they may send it to you, because we've seen a lot of people get that tax bill and they're like, where did this extra money come from? I know how much I make, and and that's where it came from, is that they got a the IRS got the 1099-C. The individual didn't know until they got their tax, and it said that they owed taxes. So, for example, if the creditor is continuing to try to collect the debt after sending you a form 1099-C, the creditor may not have canceled the debt, and as a result, you may not have income from a canceled debt. Now, they cannot, this is very confusing. If they send you a 1099-C, they cannot continue trying to collect on the debt. They can't do both. For the IRS is kind of letting them play both sides of the track. But if the creditor sends you, for example, if the creditor continues to try to collect the debt after sending you a form 1099-C, the creditor may not have canceled the debt. As a result, you may not have income from a canceled debt, and you should verify with the creditor your specific situation, your responsibility to report the taxable income of canceled debt as income on your tax return for the year when the cancellation occurs doesn't change whether or not you receive a correct form 1099-C. So you can see I just explained it to you. Like, I don't know what's going on with the creditors. They forget. They want to, try to harm people. Hate to use that word, but it does harm people, because if you had an IRS looking at you one way because they got a form, and then they have the ability to be able to try to come after you for that debt, so then what is the appropriate way that you notify the IRS that they're still trying to come after you, and they sent the IRS a form 10, they filed a form with the IRS. Shouldn't that be illegal for them to do that? If you're gonna still collect on the debt, but you're sending a form to the IRS that you want the IRS to legally try to put taxable income on an individual's on the individual's taxes, shouldn't that be illegal for them to do? But no, they put all of the responsibility on the consumer. So now, let's go. They show some examples here, but I'm pretty sure exactly, it's very simple. Any property, any debt that you have where the amount is forgiven, where you don't have to pay either the whole thing or you don't have to pay a portion of it, that could be submitted to the IRS as a cancellation of debt, and you have to pay taxes on it. So now, let's talk about some of the exemptions. Amounts canceled as gift, bequest, devices, or inheritance. Certain qualified student loans canceled under the loan provisions that loans would be canceled if you work for a certain period of time in a certain profession for a broad class of employers. Also, with Biden's student loan program, they were saying that they were not going to make that go on 1099-C. Certain other educational loan repayment or loan forgiveness programs providing health services, certain student loan discharge after December 31st, 2020 and before January 1st, 2026. Amounts of debt cancellation that would be deducted if you as a cash basis taxpayer paid it. A qualified purchase price reduction given by the seller. Any amount discharged from certain federal private educational loans. And here goes some exclusions. Debt canceled in a Title 11 bankruptcy case, boy, they're always protecting the businesses. They're always protecting the businesses. Debt canceled to the extent insolvent, cancellation of qualified farm indebtedness, cancellation of qualified real property business debt, cancellation of qualified principal residence indebted that is discharged subject to the arrangement and that is entered into the evidence in writing before January 1st, 2026. Generally, if you exclude canceled debt from income under one of the exclusions listed, you must reduce certain tax attributes, certain credits and carryover losses, carryovers, basic assets. That's getting a little into the whole weeds there. But the form that you would fill out, this is the form. It's an easy form. It won't open up on here because it's a PDF form, but the form will ask you certain questions and you can end up exempting out to where you won't even have to pay any additional income on the 1099-C debt. Let's just try to see if this will open up here. Try to see if it'll open up. I'm have to really get this looked at to see why this won't open up on here. Something just won't allow the PDFs to open up. But I want to show you something on my website, how why this is very important that we need to go through this, is because I had a client, I've had several clients that we've been able to get hardship discharges. We've been able to get settlements for a lot of clients, and I want to show you what that could look like. You can watch this video here. This is one where I did like 1 hour of just results. Now that video, it goes from results that we've gotten for clients with bankruptcies, other collection accounts removed off of their credit reports due to the verification, 8-point validation process, and also the settlements that we've been able to get for individuals and debt forgiveness. Now, let me show you something here. I have a client, and it took us a lot of years to be able to get this done for him, but it was worth it. When you see the amount, you'll see what I'm talking about. You'll see the amount. Here we go, right here. So you see here it says Form 1099-C. We have Chase Bank. We have the amount of $36,248.30. You see where it says right here, 1099-C, cancellation of debt. The date, remember they were talking about the date. The date was 8/29/2014. Wait, what is this here? I don't know what that's all about. Amount of, I think you can see that here. Amount of discharge, $36,248.30. Interest, they didn't do any interest. It was a credit card debt. You can see everything right here. Debt description. If yes, the debtor is personally liable for repayment. Yes, they were had to be liable for repayment, but this is what they submitted. So when he got this form, he was like, Steve, what do I do with this? First, he was happy that this happened, because he was like, what does this mean? Is this just something that they're telling the IRS and then they're going to still be coming after me? No, they wanted him to report this as income. For him, it was a little bit easier because he owns a business and he's able to write off a lot of stuff off his taxes. For individuals, because you may not own a business, you may not have, certain types of deductions that a business owner would have, you would really need to use that form that I just showed you, that 982 form, because then that's going to be able to walk you through what you would be able to do. Whoa, why did they go like that? That would walk you through exactly what you would need to do to be able to see how, if you're going to even have to put any of it as income. And you'll be surprised, a lot of people, when they fill out that form, all of a sudden they're like, oh, okay, everything is okay, I don't have to put it. But you are required to file the form. That's the big thing. Like, you may not be required to pay anything on that income, but you are always required to file the forms. That's the IRS is just about, hey, did you file the document? If you don't owe us the money, fine, you don't owe us the money. But did you file the document? That's where they always seem to get us, where if you just forget to do a form, all of a sudden a company sends the form, because the company is going to send this form to the IRS. You better bet $36,248.30. You think that they're not going to send that to the IRS? They're going to send that to the IRS. They're going to get that huge write-off on that. And then, the individual, the IRS is going to expect $34,248.30 to be added to the gross income of that individual. And if they don't see that, it's going to bring up a red flag. And then all of a sudden, if this person was to just disregard it, just imagine $36,248 stacked on top of your income, and you disregard it, and you just think that, oh, it's going to go away. All of a sudden, it's going to blow up, and it's going to be a lot of money that you owe to the IRS. All right. If you have problems with 1099-Cs, you can contact my office, and we could help you, kind of lead you in the right direction. We don't do the tax work, but we can, potentially refer you to someone that might be able to help you. Also, you can look at doing offers and compromises, and also make sure that you look at that form to see if you even have to pay the tax. That form, just so you know, I'll go through it again, is 982. So you can see that if you will get a waiver to where you don't even have to have that income reported, that money reported as income, but you just have to file the document to show that you qualify not to have it placed as additional income. So if you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, what makes us different, so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, go to the website your3scores.com to grab your TransUnion, Equifax, Experian credit reports and all 3 scores, and it has all of the information on there, including something that our monitoring service has at the bottom that I've seen that has helped a lot of people when debt collectors were trying to come after them, was that it'll say cancel debt. If it says cancel debt in the comments, that means that they've sent that potentially to the IRS, and that if you were to pay a debt collector, if you were even to pay the original creditor, you would be paying twice, because they expect you to pay on that as to report that additional income. Once that's done, that's why I don't like that confusion that the IRS had, because once that's done, the IRS, and you know how they are, they expect you to report that as additional income. And why would you have to pay a debt collector when you're going to be paying the IRS on that additional income? So it's a very good monitoring service. If you have debt collectors coming at you, grab my 3-pack of letters, statute of limitations, cease and desist, collection activities letter, and the debt validation letter, so you can go back and forth with debt collectors to let them know that it's not going to just be where they're just going to walk all over you. I do ask for a donation on those, or you can get the upgraded letters for $29.95. That helps me with my time here on the channel, and to monetize the time that I'm here on the channel. Thank you for your time. This is Stephen A. Williams, President and Founder of thecreditrepairshop.com.